Alrighty, time for our Fiscal Focus segment, as always sponsored by InfoChoice, your choice of information on Australian consumer finance. Now, this week, there's one key deadline that looms larger than a Halloween lantern, and that's the due date for submitting last year's tax return, which falls on the spooky celebration of Halloween on October 31st. So if you're terrified of taxes and haven't submitted your return yet, it's time to toughen up. Now, one person that's warning people not to ghost the ATO this year is CPA Australia's tax lead, Jenny Wong, who I'm pleased to say joins us now. G'day, Jenny. Welcome to the Savings Tip Jar.
Thanks for having me, Dom.
Now, Jenny, first up, what's the punishment for missing that tax deadline? What's the punishment for a late tax return?
So a failure to lodge on time means you could be up for a penalty, and it's $313, going up to $330 for every 28 days a return is overdue.
Wow.
But the ATO understands life happens, so they don't usually penalise isolated cases of late lodgement in practice.
Mm-hmm.
But if you anticipate a delay, reach out to the ATO and they'll consider your individual circumstances.
Yes, certainly. And I mean, is that a punishment that just is for everyone, no matter what? Like, what if there's just some teenager just worked a few shifts and just probably not fully educated on the whole process around submitting tax returns? Perhaps it'd be a bit unfair on them for them to get such a large fine as opposed to someone who might have a $10,000 tax bill and is deliberately dodging it.
Yeah, that's right. If it's once off, the ATO. You probably could approach the ATO on that isolated case and ask for a remission. But if you've got a history of not lodging on time, then that could be a different situation, I think.
Yeah, cool. And what about if you're aware of the deadline, but you want to look at a way around it because you want to submit a bit later? We understand if you want to use an accountant, that tax deadline is a bit later.
Yeah, so if you think you're not going to meet the 31 October deadline, then appoint a registered tax agent like a CPA, ensure you're on their books by 31 October. I think you've got less than a week to do so. And those who use a tax agent, they get extra time to lodge up to May next year, I believe.
Yeah, right. No, I know from my past that, when I was anticipating a large tax bill, that's what I did. I would sort of use the family accountant to sort of get around and kick the can down the road a little bit. So, but just jog my memory there. What's the process involved with that? Do you need to log on to MyGov and fill out a form to say I'm going to be using a tax agent?
You just need to be on the books of your registered tax agent, essentially.
Okay.
So, yeah.
That seems pretty simple. So now, just generally, what are some of your top tips for lodging your tax return?
Well, firstly, be as thorough as possible. So check the pre-fills. So the pre-fill feature that the ATO has is a great tool. So essentially, the ATO uses the information, from your employers, your banks, other sources to pre-fill parts of your tax return, and it can save you a lot of time and effort. However, it's crucial to double check that all the pre-fill information to ensure accuracy. You might have circumstances that change, your work circumstances could have changed. So just ensure, all the income is reported. And the same goes with your deductions. Don't copy and paste what you did with prior years. And because people have been incorrectly claiming work-related expenses. And that's something that the ATO is looking at. Again, your circumstances could have changed, like you could have switched jobs, and just ensure that, what you've claimed is correct. And the ATO has specific occupational guides as well on their website to help you figure out what you can and cannot claim as well. The ATO is also looking at work from home deductions, so ensure that you can substantiate those sort of claims. You've got rental properties. The ATO is also looking at sort of inflating claims on rental properties. The ATO often sees things like landlords making mistakes when it comes to repairs and maintenance deductions on rental properties. You can claim immediate deduction for general repairs like replacing damaged carpet or broken window, but if you rip out an old kitchen and put in a new one or improve one, that's capital improvement that is only deductible over time. And the other thing is watch out for scams as well.
Yeah, certainly. I do feel like around tax time, I tend to get a ramp up in scam calls, and I'll get voicemails from people saying they've got a warrant for my arrest due to something or another to do with my taxation, which I highly doubt. I hope there's not a warrant out for my arrest. But what are some of your top tips for avoiding these tax scams? What to watch out for?
Yeah, so the scammers generally target people with last-minute calls to action and promises of substantial refunds. Tax scams are becoming increasingly sophisticated each year, and scammers often exploit situations like approaching the tax deadline. One of the things to watch out for is like poor grammar or unusual language in any communication you receive that claims to be from the ATO. The ATO takes great care in communication, so anything that seems unprofessional should raise your suspicions. Another thing to remember is that the ATO stopped using hyperlinks in their unsolicited SMS messages, and this is to help people distinguish between genuine ATO messages from fake ones. And one of the more common scams are the ATO branded emails containing links to fake MyGov websites. Scammers use these fake websites to steal in your sign-in credentials, gain access to your MyGov accounts, and once they get access, they can make fraudulent lodgements, change the name, change your bank account details, so payments are redirected to scammers' accounts. So that's some of the things to look out for.
Mm-hmm. Yeah, it sounds like those are the things that people should be more scared of, as opposed to actually just lodging your return on time.
Yeah, absolutely.
Now, Jenny, we know the ATO is getting smarter and smarter every year with technology getting better, and perhaps even with the advent of AI technology really taking off everywhere. Everyone's using it. I guess, does that mean perhaps people who are doing the wrong thing should be more fearful of the ATO, the types of technologies that they have now?
Yeah, so the ATO uses data-driven profiles based on things like employment type and your financial investments to identify where some people may be pushing the boundaries of what they are entitled to claim. The ATO has sophisticated data matching systems that can easily spot discrepancies. So the message here is don't exaggerate your claims.
Yeah, certainly. It's like the way to go, because you can't get around the ATO. They'll catch up to you. Jenny Wong, really appreciate your time on the Savings Tips Chat podcast. Thanks so much for your insights.
Thanks very much for your time.